Welcome to the Drill Down, in-depth answers to oilfield questions. I'm John Spears.
And I'm Richard Spears. After having just completed an exhausting drilling and production outlook broadcast from the home studio here.
Yes, and one of the interesting questions, or one of the topics that got covered there, was about the recently announced combination of Liberty and Schlumberger in the Frac business. So catch us up on what's going on there.
So you would have to be completely deaf and blind.
Yeah.
And to have missed the news that Schlumberger is carving out their North American hydraulic fracturing and cased-oil wireline business and sand business, and plugging it into Liberty Oilfield Services to make a super company that's really focused on hydraulic fracturing specifically, completions more generally.
Yes. So, but Schlumberger is hanging on to the non-North American part of the frac business.
If you look at 2019, so the prior year, complete prior year, Schlumberger was about a $4 billion hydraulic fracturing company globally. Okay. $2.5 billion of that was in North America.
Okay, that was last year.
So last year they did $1.5 billion worth of frac work. This year, $1 billion worth of frac work for the international part. They're keeping that.
Yes. Okay.
And I don't see any reason why they would ever get rid of that because outside North America, it's kind of two guys duking it out. It's Halliburton and Schlumberger.
Yeah, gotcha.
Every once in a while, Baker sneaks in and does a frac job.
Yeah, right.
It's a two.
Yeah. So the North American piece is going over to Liberty. What does that mean in terms of a combination?
Yeah. So here's what this is going to look like. If those guys were combined last year, they'd be number 2 in the world.
In the world?
In the world.
Okay, right.
But it's just a North American company at this point.
Okay.
And so if they were combined last year, it would have been a $4.5 billion company. But that's not happening this year.
They'll be a little light.
It will look more like a $1.6 billion company combined this year.
So from 4.5 to 1.6, down
a lot.
2/3.
I can't even do the math. It's so far down. Because Q1 was really quite good for both companies. And it's Q2, Q3, Q4. So let's have a little comparison here.
Okay.
Halliburton's still number 1 in pretty much everywhere, but it's in North America. Halliburton North America is going to be about $1.9 billion this year.
This year. Okay.
You take the combination, if they were combined the whole year, Liberty would be $1.6 billion this year.
Okay.
So they're going into next year with almost half of the frac market.
Those two companies together.
Combined.
Going
into 2021. And that has major implications because you've been getting telephone calls.
Well, yeah, sure. Because the couple issues then is what's going to happen to frac pricing, both in terms of the new structure of the market, and just in terms of activity. What level of activity do we expect to see going forward? So let's answer those two questions sequentially.
Because what do your oil company customers wish for right now?
Well, they're always trying to work prices lower, right? Everybody would like to see, given that it's $40 oil, to wring as much cost as they can out of the drilling and fracking a well. And so on the frac side, we've already seen prices come down maybe 15% since the start of this year. And the question is, do we expect to see pricing go down in the frac sector going forward? And before this combination took place, I would have said that there was probably very little chance that we might see around the edges, and in a few markets we might see some weakness, but generally speaking, from an activity standpoint, what we expect to see is that this is 1st of September. We see activity sort of in terms of rig count, in terms of frac activity, sort of holding at this level through the end of this year, and then slowly improving over the course of 2021. From the start of 21 to the end of 21, maybe a 20% improvement as some operators, the ones with good balance sheets and low costs, begin to get a little bit more active.
But just in terms of like where we are in the cycle, we're at the bottom.
We're at the bottom, and a gradual improvement going forward. So given that, I would have said, okay, there's maybe in the frac sector again, maybe a few places where prices get a little weaker, but generally speaking, no.
But this little combination changed the metric, didn't it?
Yeah, well, when you have this much concentration in the market.
That would be 2 companies with half the market.
Yeah, right. Then now you're looking at I don't know that that's enough to, they can't just on their own start raising prices.
No way.
Because there's still other options,
Still
right?
30 frac companies
Yeah,
out
right.
there.
Yeah, and we know that, that operators have options and they'll use them. But I think it tells me that the chance of prices going down is going to be
Almost zero.
slim. Yeah. The question is, would number one and number two, Halliburton and, are they still going to call it Liberty? What are they going to call it?
Liberty.
Liberty. Let's call them Halliburton. Would they have engaged in a price war? I'm not sure at this stage there's much to fight about. So
they've got they got maybe the two best CEOs in the industry running each one of those companies.
Yeah, right.
No price war.
Yeah, not that there'd be a collusion thing. It's just that they've got to hit certain metrics for their investors, and so that generally precludes at this stage, especially when activity is beginning to stabilize and has the potential to edge up. Then I think this is where people look internally and say, what can I do about improving my profits? Not necessarily relying on
And neither one of those two companies has debt to speak of. So there's not going to be a banker out there screaming at them. There will be shareholders out there screaming at them, but shareholders have already driven price to nothing. The share prices to nothing.
Yeah.
So what's the pressure? I think we have two CEOs who have the great opportunity to just run their business the way it should be run. So they're gonna figure out a way to be efficient, make a profit, because they've got a huge chunk of the market now.
So it makes operational sense what's been done.
I'm a fan.
Yeah. Well, let's hope that it works out for them. Let's hope that our drilling forecast is spot on. And
isn't it always?
And let's hope everybody had a nice Labor Day holiday.
I think so.
Thanks so much for listening. This has been the Drill Down. I'm John Spears.
And I'm Richard Spears.